That's all that matters. Good morning and welcome. Sorry about the technical difficulties. We had a lockup in our audio stuff. It happens once in a blue moon. And this is the Patriot Radio News Hour. Joe and Jason, we are live on this Thursday. Really happy to be here today. A lot going on as always now, right? I mean, you just don't know. We've got PPI out today. We had jobless claims out today. We got reciprocal, what Donald likes to call reciprocal tariffs, which, what does that just mean? It just means we're going to have tariffs. Also, meeting with the Indian Prime Minister Modi today, and, this is how important India's become. Let's not kid ourselves here, right? They're the fifth largest economy on the world, on the way to be the fourth largest. Listen, they're on their way to being the second largest economy in the world eventually. We're surpassing the United States, and of course, China will probably be number one in the world, and India would be number two. Just they got 1 billion people, both of them. So just kind of will work out this way. We've got higher gold prices again, not surprising, as the inflation numbers from yesterday came in hotter than expected. The PPI numbers, that's the producers. So the producers, what are they telling us? And they're telling us the same thing, which is, hey, guess what? Inflation is coming in hotter than expected. It was up 0.4% month over month. And the big thing, though, with the producer prices is December's, which was 0.2, was revised to 0.5. I mean, I don't know how you miss it by that. I mean, by the way, that's just a lot. So when you think about December and January from a producer perspective, man, that's 0.9 in just 2 months. I mean, that is much, much hotter than expected. Headline 3.5 versus 3.3. Now, remember, yesterday, the headline for the consumer was 3. And then, of course, you had the core, the super. Remember, super core was like 4.2. The producers were saying, hey, listen, our headline was 3.5. By the way, the 13th straight month without a decline. By the way, the core up to 3.6%. I don't think the producers, Jason, they don't have a super core. So we won't have that number. But big, obviously, increases. Diesel fuel was up big. Over half of the things, when we look at final demand for goods, energy was a big part of that. Obviously, chicken, eggs, anybody that has to produce something that has eggs in it, right? I mean, that number is always going to be a big number. But again, this is just more follow-through from yesterday. Remember, we've got a 30-year auction today. Yesterday's 10-year auction. Here was the good news. It wasn't horrible. It was just disappointing. So call that a win. Again, right, the Treasury is in the middle of trying to refinance, or, well, I guess re-up the checkbook, if you will, and Donald Trump will be out at 1 Eastern. So what is that? 11 o'clock, the Arizona time right now. Trump will be out with a news conference having to do with reciprocal tariffs on a slew of other countries. We won't get all the details, but this is going to be things like, hey, you've got a really big tariff on product X. we're going to put a really big tariff on product Y, right, to combat that. They say that they won't go into effect today. So they'll make the announcement today. There will be a starting date. That'll be whether that's March 1st or April 1st, something like that these reciprocal tariffs will be in effect. And right now, according to what we're hearing, it may involve every country. We don't know that yet, but this is something Trump was talking about, that reciprocal tariffs on every country that imposes import duties on the U.S., which is, most of them. So this will be something that I think we're going to keep our eye on. The higher these reciprocal tariffs are, obviously, the way we're just going by how gold reacts to it, we're probably going to see higher gold prices. The higher these reciprocal tariffs are going to be, we're going to get that information. We'll probably that'll be something that we'll probably cover on tomorrow's show, exactly what is going on there. Yesterday, there was a conversation between Putin and Trump. I think Russia and Trump could get a deal done on Ukraine. I just don't know that Ukraine will go for it. No NATO, no going back to the original border. I think they're saying, hey, Crimea is going to be Russian territory. I don't know about Donbass. But so far, the Ukrainians, they're upset because, hey, wait a minute, shouldn't we be involved in this? And, let's face it, probably not, right? Because if they didn't have the aid from the U.S., would there even be in a war at all? Hey, listen, we're starting to get this stuff figured out. Jack, great job on getting us back up and going. Patriot Radio News Hour, Joe and Jason will be back after the break. All right, we're back. The Patriot Radio News Hour, Joe and Jason on this Thursday, fighting through some technical difficulties. But let's take a look in at the market. So we had much higher inflation. Jay Powell spent Tuesday and Wednesday in front of Congress, yesterday kind of saying, we're doing all we can on inflation. We're not going to cut rate. We're not in a hurry, but it's not our fault. Okay. But I thought they could control inflation. Thought they could. They say they can. Apparently they can't. But of course, we've been telling you that all along. Right now, the Dow's up 160. Most of this having to do with, hey, maybe the war in Ukraine could end. I don't know. I think it could end. I think Russia and Trump can make a deal. We'll see how Ukraine feels about it. The S&P's up 30. The Nasdaq's up 200. The 10-year note, which is, been on a wild ride. Right? Yesterday, sky high. Today, back down to in the 4.5s. But again, we'll see. We'll see. We got a 30-year auction, and those are always tough to sell. But we'll take it for right now. Crude oil coming off the lows. Again, crude was falling on fingers crossed. Maybe something going to happen in Ukraine. Gold up 15, 29.20. Silver 32.16. And I'll just say this. Be ready. Be diversified. Be smart. Understand what really is playing out here. The United States, along with every other country really in the world, has a debt problem. Whose debt is going to be bought? At what price will it be bought? How much interest is it going to cost us? We got the deficit numbers out. We shared those yesterday about how much bigger the debt was than the first 4 months this year than last year. Interest payments, right? Now already up to $1.2 trillion, now going to be about 1.5 to 1.8. Remember last fiscal year, the interest payment on the government, it was a little over $1 trillion. So you can see how bad the problem really is. If Trump was able somehow to save $500 billion, which would be a miracle, the interest would eat it all up. It'd be like saving nothing. This is the big problem. In gold, I don't know what's going on here. This is something, like I said, I've been doing this a long, long time. The amount of gold that is being bought by big players, it's overwhelming. The amount of gold being physically possessed, going into the vaults primarily in New York, are unprecedented. Haven't seen it before. Obviously, I'm trying to figure it out. Jason's trying to figure it out. You guys out there are trying to figure it out. But the message is being sent. Something's coming, right? Obviously, something's coming. And it has to do with currency. It has to do with fiat money. And people are getting ready. This isn't, listen, I know, it's the tariff thing. No, it's not. I wish it was. That'd be easy. You wouldn't be shipping this much gold to New York on a tariff. I mean, this is craziness. You got big IRAs out there. Put some of that into these precious metals IRAs. Call us. You got big money in the bank. Call us. The specials have been spectacular. By the way, we're going to do it again today. But let me give you an idea of what has been happening. Jason and I have been telling you about the amount of silver and gold going to the smelters. Like, it's off the charts. We've never seen this type of activity. And the reason is physical deliveries got to get made. And they're not happening. Yesterday we told you about now South Korea. Hey, we're out. We're out. Where the Korea, hey, we want gold. We don't have any. Yesterday, the Chinese banks, the Russian banks, all coming out saying we're sold out. We're out of, and they do a lot of gram bars in China. They do a lot of that stuff. And all of the big major banks in China say, hey, we don't got anything to sell you. Why? Why?
It's going up.
Right? Why? Because the price is going to go higher. We ain't selling it to you now. Right? We'll let you know. We'll get back to you. But I want to point out.
Plus, a lot of gold, Joe, is just going upstream, isn't it? It's all going upstream. It's not going down to retail. It's going upstream. You melt it so that you can put it into deliverable bars.
That's exactly what we're talking about. It's unprecedented. We know that London, technically, they won't call it default, but it's default. Right? When you're sitting there telling people, I'll get you your gold like 6 months from now. What is that? Right? What is that? Then we were talking about the gold markets in Shanghai. All of a sudden this week said, gosh, we got shortages. Now that makes sense, right? Because a lot of their gold was coming from London. right? If London ain't delivering, they've got a problem. Of course, earlier this week, China announced, hey, guess what? We're going to let all of our insurance companies start buying gold. Uh-oh. Understand, right? I want you to understand what insurance companies do. They buy bonds. Period. That's what they do. They buy the bonds of fiat money, whether that's U.S. bonds, European bonds, Asian bonds. That's what they do. China's like, hey, get diversified. Get diversified. Right? I mean, have you figured? Focus here. Focus.
And Joe, when you say these delivery houses are having trouble keeping any supply, it means one single thing. Because you just said Shanghai, you said London, you said all over the world. It means the price is too low. That's what it means. I mean, if gold was 6,000, it would probably slow up the demand, wouldn't it, Joe? That would the deliveries would get fulfilled because the price would be fulfilling the need, whatever the currency is being used. The price is too low. That's the scary thing, Joe. The price is, from what you just said, is far too low. 2,900 is far too low. So you guys complaining about 2,900 gold. What about 5,800 gold? We'll just double it, right, Joe?
Yeah, I don't know. You know, of course, then there was the rumor this week that Scott Bessent may be considering revaluing U.S. gold inventories to help with the nation's debt problems, right? And then, of course, like we said, yesterday, it was the Chinese and Russian banks saying, hey, we don't have any more gold to sell to the consumers. And Jason, we know they're sitting on, well, we thought, huge amounts of gold. So something has definitely changed, and it's not tariffs. It's not. I mean, why would you move gold from London to New York over a tariff? We wouldn't. It's not like the gold that's used for industry, right? Industrial stuff. What are we talking about? Cell phones, computers, laptops primarily, right? None of that's built here. Right? You wanted to put it here. Right? No. Something's up. Like I said, I have been doing this a very long time, and I've never seen anything like it. I don't know how it's something where when we look at retail demand here, right, it's slow, right? And I get it, right? It makes sense, right? Because let's face it, most gold buyers tend to be Republicans. I don't know why. They just are. A little more conservative.
Gold's a conservative investment or a savings. It really is.
Right. And of course, you have the Trump presidency. People are feeling good. Right? Who doesn't like the Doge headlines? And, hey, we'll take Gaza. We'll make Canada the 51st state. Like, people like that stuff. They do. I like it. By the way, I'll tell you something crazy. My wife and I, our son, for Christmas, bought us this cooking class, you know, and we've done a few of them with the kids. They're something to do, you know, and we had it yesterday. My wife and I did. And the people next to us in the class happened to be Canadians, right? And I was laughing, and I'm like, yeah, we always laugh about how Arizona's South Canada. And they're like, yeah, we live here year-round, and our kids are visiting. And I'm like, so what do you think about you guys becoming the 51st state? And I thought they were going to be like, oh, this is ridiculous. You know, they were all for it. They were like, yeah, that would be great. I don't know, but it was interesting. I'm telling you right now, this may be, and it's hard to say it, but I think it's true. This may be the best time to buy gold and silver ever. And really, obviously, let me preface that. Obviously, if you could go back 22 years ago and buy gold at $300, right, that'd have been awesome, right? I get that. But what I'm saying is, buying it this close to spot, like today, we've got a gold special today. We had it yesterday. We got the rest of it today. You're buying gold for under melt. You're buying gold for under melt. This is insane. But I want you to think about this. Why is seemingly every major bank, every sovereign wealth fund that isn't part of, I'll say, the outside of the G7, why are they all buying gold? Central banks continuing to hammer gold. Get ready. Get ready. We're going to have one last huge special coming up. Stay with us. You're listening to the Patriot Radio News Hour. Joe and Jason on a Thursday. Hey, we're back. The Patriot Radio News Hour. Joe and Jason on this Thursday. And if you want to be as free as a bird, call the Patriot Trading Group. Get your gold and silver put away. I'll just say that I'm going to go through the specials that we have. And then there's reports breaking as to what is going on. I'm going to share those with you right after this. We had these graded pre-21 Morgans below cost. You guys didn't like them. So I'm going to take another shot at him here before I dump them on to the wholesaler. So now I'm going to, it was already below cost. Now I'm going to offer them to you for what the wholesaler is going to pay me. I've got 17 MS63 Morgans. They were $55. They're $50. $50 for Mint State 63 Morgan silver dollars. You know what's funny? Pre-21 AUB. Well, if pre-21 BU Morgan dollar is like $50. So MS63s, 17 of them, $50. I've got 21 MS64s, pre-21 Morgans. They were $75. Nope, now they're going to be $70. And I've got 21 of those. I had these assorted these assorted piece rolls where like 12 of them are AU and the other ones are VGs, but you get 20 piece dollars. They were $5.80. Going to be $5.40. And I've got 8 of those. I still have like 7 or 8 of the 2008 First Strike PCGS rolls. Remember, PCGS created this special roll and slapped First Strike on them and all this nonsense. By the way, silver premiums jumped today. But they are below cost at $695. Okay, so that's the silver side. Right, $695 on a roll of 20 First Strike 08s, PCGS. Mint State 63 Morgans at 50. Mint State 64 Morgans. By the way, all pre-21s at 70. Then on the gold side, we still have, like 20 of these still left from yesterday. You're going to get a $20 gold piece and a 1 gram gold bar for $2,800. $95, which, by the way, is just a little bit below melt. Well, was. Sorry, yesterday. Today, got gold at $29.20. So you're talking about, what, $25, $26, $27 under melt when you buy a $20 gold piece and a 1 gram bar at $2,895. It is incredible, the opportunity. I don't care whether it's the Morgan or the Peace dollars, the $20 gold piece or the 1 gram bar. You don't buy this way. This doesn't happen ever, but it's going to happen today at 800-951-0592. Now, why is all of this gold flooding into the United States? There's a couple of theories that are playing out. Bloomberg. Okay, so this isn't, some gold bug, some guy that you never heard of that's talking about this. Oh, this is Bloomberg saying there's a couple of things that we're looking at. Number one, they are saying this one is maybe the least probable. They got two theories. Let's start with the one that they're saying, hey, this could be it, but we're hoping it's not. Well, that's the way I'm going to read this. That the United States is gearing up to revalue its gold reserves, and that the recent influx into the COMEX warehouses in the U.S. is because that the United States is going to revalue its gold, and people are talking about it's not going to be revalued at $2,900. That it's going to be revalued at something over $3,000. I don't know this. There's been rumors of this all week. That one of the ways that they could maybe drive the 10-year note lower. Remember, Scott Bessent in his testimony last week was saying, hey, listen, we're less worried now about them cutting rates, because obviously with inflation they can't, and save any face. How can we get the 10-year note lowered? This would be a way. Right? If all of a sudden you took gold, which they've only valued at $42, like $11 billion, and came out and revalued it to where it was worth, listen, at $2,900, now you're talking about $750 billion instead of $11 billion. But that may not be enough. So this could be something where, hey, we could revalue it at $1 trillion, which would obviously put it well over $3,000. But that is one interpretation of what is going on. And like I said, there's been rumors of it all week. And it does make sense, because he's been talking about how can we get the 10-year note lower without the Fed cutting rates. The other, which I don't know which is worse, so listen to what they think. This is probably what they call it, the likely primary cause. And what they say, the likely primary cause is the lack of physical gold. We've heard this a lot about the paper markets, right? There are all these paper contracts. There's not enough gold to even cover a small smidgen of the amount of paper out there. But according to Bloomberg, they're saying that they think the most likely cause is the lack of physical gold on the markets, And all of a sudden now, a big increase, right? Look at what these central banks have been doing for the last 3 years. But the increase in physically taking possession has created a huge shortage of gold, and they're worried that there could be a possible gold default. In other words, what would that look like? Well, we've got, let's just create a number. We've got 1,000 tons of gold, and the delivery requests come in, and they want 1,500 tons of it. Well, guess what, right? That's a problem. But according to Bloomberg, they're speculating that that may be exactly what's been going on. We'll be back after the break. We're back here, Patriot Radio News Hour. Mostly me. Jason's trying to help get some of the issues we're having worked out. Again, if you're just joining us, Bloomberg trying to figure out what is really going on with all of the physical demand that we're seeing in these gold markets. An incredible amount of gold pouring into the COMEX in New York. Bloomberg gave two scenarios as to what is going on. One, which they said, hey, of the two scenarios, this is the one that we think is maybe the least likely, which is the United States is getting ready to revalue its gold reserves in an attempt to drive down the 10-year note yields by making the U.S. debt look a little better. Because for those of you that don't know, the United States has not changed the value of its gold reserves since Richard Nixon, they call it closed the gold window in 1971, and it's currently valued at $42 and I forget, I don't know, $42.40 or 20 cents, something like that. It's valued. They say they have 8,000 metric tons of gold, and it's only valued at $11 billion. So obviously, there's a lot of room there. Congratulations, Federal Reserve. Great job, right? Gold was $42 an ounce in 1971, and now we're talking about $3,000 an ounce. And that makes it, how does that make it better? Well, all of a sudden, let's just say they go to it, we're going to revalue it at $1 trillion. Okay, so that would put the gold price, I don't know, $3,500, $3,400, something like that. That's an asset to say, okay, hey, look how much better that is. Hey, we just found an extra $1 trillion of assets, right? That's not insignificant. You could probably get the 10-year note to fall a little bit on that. But Bloomberg said, listen, that's out there. And they acknowledge that that rumor has been swirling. And let's just say Scott Bessent, the Treasury Secretary, hasn't done anything to stop that rumor, okay? Right? He could stop it, right? He can just come out and say, hey, yeah, we're not doing that. We're not thinking of that. That's false. He hasn't done that. But the one that Bloomberg says, hey, this is probably what we think it is, which is there's a shortage of physical gold, and this game with the paper contracts that, gold bugs have been crying about this since before I was in the business. And I always viewed it as, listen, it is what it is, right? These paper contracts, right, they're supposed to set the market, right? Tell us, well, what is gold worth? And they say, well, they've been using it to manipulate and on and on and on and on. Now, we know for the last 3 years in particular, physical demand has been off the charts. And everybody's been speculating, when is this going to affect the paper gold markets? And Bloomberg is speculating that time has come. And it's kind of interesting that now China's telling its insurance companies to buy it, right? That's really interesting. And listen, the insurance companies don't buy a $20 gold price, a $20 gold piece in a 1 gram gold bar for $28.95. They'll buy metric tons, right? They'll buy 32,150 ounces at a time. Jason, either one of these scenarios is likely possible. I agree with Bloomberg. I think this is more of a squeeze in the physical gold markets. But, the one thing I think of, what if they do both? Right? What a great thing that could be. Could you imagine a physical gold squeeze? I mean, you could, I'm talking about $3,000 gold. If we have this squeeze going on and it doesn't stop, we could end up in a situation where, in the matter of like 72 hours, you could have a doubling of the gold price. Then can you imagine Scott Bassett comes out and say, hey, we got $2 trillion worth of gold, not $1 trillion, right? I mean, these are things that I think are very possible. Because I don't know how you get the 10-year note lower without doing something like this. But again, who knows? But it is something where, like I said, if I'm out there, I'm buying today. I don't care if it's okay. I just got redlined, so there are no more MS-63 Morgan dollars. There's no more 64 Morgan dollars. We've got a few rolls of the peace dollars that are AU VG plus mix at 540. We still have a couple of rolls of the 2008 MS-69 PCGS below cost at 695. And we still have about 15 20s with a 1 gram bar. So you get a $20 gold piece and a gram bar for $28.95, which is like 20-something dollars below melt. I mean, it's insanity.
And we got gold below melt at a time that we're telling you it could just keep on spiraling upwards, and we're selling it below melt. So there's not going to be a lot of gold below melt that I see in the future. I mean, it could happen again. We're dealing with some wacky markets, but I would say anytime Patriot's going to say gold below melt, I don't have any idea why they were still even existing yesterday, Joe.
This is wow. Quite an interesting story out of Bloomberg. And they did question, in the article, they questioned whether or not the U.S. really has the 8,000 metric tons. I don't know. I mean, it hasn't been audited since 1974, so we'd have to wait and see. Patriot Radio News Hour, final segment coming up. We're back here, the half-empty cup coming up next. But just really quickly, RFK Jr., I'm looking at a shot of C-SPAN here. He's got at least 51 votes, so that's all he needed. It looks like, It looks like he's going to go down the same as Tulsi Gabbard, 52.48. Right now it's 51.47, but Mitch McConnell, the only no vote for the Republicans. So Tulsi Gabbard got confirmed yesterday. Looks like RFK is going to make it and be our new, Health and Human Services, is his title? Yeah. Health and Human Services is going to be RFK Jr., so I know a lot of people were excited about that. Obviously here for Patriot News today, more rumors swirling. What the hell is going on in the gold markets? Why this incredible demand for physical? Got to remember, this isn't paper. Gold physically leaving London, coming into New York. Speculation about there being a squeeze, that the metals weren't going to be there, that maybe somebody knew ahead of time or let it be known, hey, we're going to be taking physical delivery of this gold that normally we only take paper. I don't know. But Bloomberg speculating there may have been or is ongoing a physical squeeze in the gold market. Now, that makes sense, right? Based on what London's saying, what Shanghai's saying, Korea, Russia. I mean, pretty much everybody's saying it now. But on top of it, that the United States may be getting ready to revalue its gold holdings so they can drive down the 10-year note yields by saying, hey, yeah, we still got all this debt, but look at this asset that we said was only worth $11 billion. Now it's going to be worth $1 trillion or $2 trillion. Who knows, all right? I mean, at this point, they could do anything. They may even say that, hey, whatever the spot price is, that's going to be what it's worth. We don't know. $20 gold piece and a 1 gram bar, $2,895 at 800-951-0592. Jason and I, we're coming back with the Half Empty Cup.